And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
Fears of an impending recession are putting a lot of pressure on the markets. Stocks are going down, Bitcoin is losing value, and investors are becoming more cautious. A new survey from the Federal Reserve shows that people are more worried about a recession than they have been in 6 months. This comes as the Fed gets ready to make its next policy decision. The Atlanta Fed now predicts that the GDP will drop sharply by 2.8% in the first quarter of 2025. This has caused new worries about the health of the U.S. economy. Also, people are expecting inflation to rise, which puts the Fed in a tough spot. If they loosen policy even more, the economy could fall even further. Or, if they loosen policy, inflation could start to rise again. The crypto markets are also having a bad day. People often see Bitcoin as a way to protect themselves from inflation and monetary instability. However, as liquidity tightens and risk-off sentiment rises, Bitcoin is finding it harder to stay supported. There is, however, a different view from ARK Invest CEO Cathie Wood. She told Bloomberg not long ago that the economy has already been through a rolling recession, in which different parts of the economy got worse at different times. She thinks that the current contraction could force the Fed to change course sooner than expected. They could do this by lowering interest rates, stopping quantitative tightening, or putting in place fiscal stimulus like tax cuts. Wood thinks that if that change happens, Bitcoin and other risky assets will become popular again, and investors will put their money back into inflation hedges and high-growth plays. She also stuck to her bold long-term prediction that Bitcoin would reach $1.5 million, which suggests that this drop could be the start of a big change in the economy and investments.
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up. Oh, my goodness. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period. So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Well, we tend not to be very short term in our focus, but if we're right, and inflation is going to surprise on the low side of expectations. We wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down, even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
CEO of ARK Invest, Cathie Wood sees Bitcoin as a measure of how willing investors are to take risks. She says that the market is clearly in a risk-off phase right now. Even though the price of Bitcoin is still going down, Wood is still optimistic about its long-term future. She points to Bitcoin's historical 4-year cycle, which she thinks is still in place. This means that there may still be volatility in the short term, but the overall trend will remain upward over time. She does warn, though, that the macroeconomic environment still holds a lot of uncertainty. Wood says that the U.S. is in a rolling recession, which means that businesses are cutting back and consumers are spending less. In the near future, she thinks that GDP growth will be negative, which could put pressure on the Federal Reserve to change its monetary policy. Wood says that inflation is already going down more than most policymakers and analysts think. She thinks that if that trend continues, the Fed might lower interest rates faster and more sharply than the market thinks right now. A change from the Fed to being more dovish could cause risk assets to rise again, and Bitcoin is likely to be one of the first to benefit. Wood also talked about the growing popularity of meme coins in her interview, calling them collector's items of today. While there are thousands of cryptocurrencies, she said that only a few are likely to hold their value over time. This is in contrast to Bitcoin, Ethereum, and Solana, which are more well-known and seen as having real long-term utility and staying power.
Well, I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. Because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins. That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, Cathie?
It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, you know that that's just a step too far, and that most of them are not going to be. I actually think it's very complicated, but in terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many, many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes. Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners. Well, I think what is happening with the stablecoin movement, which again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power.
Crypto Quant CEO Ki-Young Ju has stated that the Bitcoin bull cycle is officially over, which stands in sharp contrast to Cathie Wood's optimistic outlook. He now anticipates a protracted period of sideways or bearish price movement in the cryptocurrency market, lasting anywhere from 6 to 12 months. Kai claims that all of the main on-chain indicators are pointing to a bear market, with new whales beginning to sell Bitcoin at lower prices and fresh liquidity drying up. According to a recent post by Kai, Crypto Quant subscribers received an alert a few days ago via a signal that employs a 365-day moving average and principal component analysis, PCA, on-chain data to identify significant trend shifts. According to his data, ETF inflows have been negative for 3 weeks in a row. Bitcoin has failed to break higher despite high transaction volumes, and realized cap-based metrics verify a decline in fresh capital entering the market. Key acknowledged that even though he had been bullish for the previous 2 years despite mixed indicators, he is now unable to ignore the data. He thinks the market is now clearly moving into bearish territory, even though he isn't shorting Bitcoin himself and is still holding his spot positions. Cathie Wood of ARK Invest, on the other hand, contends that the U.S. is approaching the end of a rolling recession and that the Federal Reserve may soon change course by reducing interest rates or stopping quantitative tightening. According to her, this change might rekindle interest in riskier assets like Bitcoin. Analysts and investors are currently divided over whether the cryptocurrency market is about to enter a protracted cooling-off period, as Kai Young-ju suggests, or is about to see a new rally fueled by monetary policy changes, as Wood expects. The divergence demonstrates how unpredictable the macro environment is right now, which is why market players are paying closer attention than ever to what the Fed will do next.